investing. Zero price. Invest with confidence.
Well, our market-focused guest says that investors have brought the exuberance back into the stock market in the past couple of years, but is that exuberance irrational? Bill Spiropoulos oversees $300 million as CEO of CoreStates Capital Advisors in Pennsylvania, and he joins us from Philadelphia this morning. Are you worried that things may have gone a little bit out of hand on the upside for stocks in the last year?
Brian, good morning. You know, it's a question I've been asking myself for the last 2.5 months. What are people thinking? And I guess the only analogy I can make is we all saw those pictures from CNN 2 years ago on Christmas Day as the water on the beach was gone and people were standing there, and all of a sudden a monstrous tidal wave came. And I guess the question I have is, what were those people thinking when where there was once water, there's just sand, and boats are sitting on their bottom? Here we go again. You have a market that's been parabolic in the last 6 months, basically because of a gleeful reduction in oil prices, and a lot of speculation has been building in certain aspects of the markets. You look at emerging, you look at non-developed, you look at the small cap sector, which is for stupid money, and you got to say, what are investors thinking this time?
Well, the bulls will tell you this. They'll say, look, you got a lot of cash on hand. You got profit growth still expected to be right around, if not double digits and high single digits. And you've also got basically no return again on treasuries when you can get probably the same dividend from a number of mega cap stocks, many of which I'm assuming you're pointing to as the ones who have gone, as you say, parabolic, the Citigroups of the world.
That's true. And, you know, I don't disagree that the large growth has a tremendous amount of appeal compared to other sectors. You know, you've had almost like a coiled spring. Earnings have been going up for the last several years. But, you know, you have to be very selective, I think, in this market. And large cap, high quality growth is not what I'm talking about. I think that there are, I think this is the second longest period of record where we've gone without a 10% correction. And my thinking is that as speculative excesses build, the probabilities of a correction more significant than May 2006 is highly probable.
Well, many investors have been avoiding energy, specifically Canadian income trusts, and we did this story about a month ago on how tax law changes may hurt these companies, and they've already been sold off dramatically in some ways in expectation of that change. You're not as nervous, and maybe you see some value. One of your picks is Provident Energy Trust, Canadian company, PVX, pays out kind of like a REIT, almost all of its net income out there. Why are you buying this when everybody else seems to be a seller?
Well, being somewhat of a contrarian, I think that the energy sector's had the daylights beat out of it, and I think that history will show a bottom's probably in place here, and it gives investors an opportunity to buy cheap assets at a discount. Provident Energy is selling at 76% of book value. The cash-on-cash return to investors is about 15.25%. And yes, the Canadian tax on the trust, it's a 4-year phase-in. I think they may rethink that and go back to a more tempered tax policy. I think this is a great opportunity when you look at where natural gas is and the cash returns and the deep value that this particular holding offers.
Which is kind of an interesting segue, because you also like a U.S. energy company, or really a transportation company, Plains All American. What's so attractive about a pipeline here that's already had a huge run of about $10 a share in the last couple months?
Well, again, you know, I think that is an attractive long-term play. The distribution of energy in America is something that's not going to be changing anytime soon. The security still offers almost a 6% cash-on-cash return, and 85% of that's tax-free. Why would you go buy the long bond at this level?
All right, Bill. Well, Bill, we got to leave it there, unfortunately, but we appreciate your insight. Thank you very much. Bill Spiropoulos, CEO of CoreStates Capital Advisors. Bill, we'll get you back on here morning call soon. Take care.
Thank you.
All right. Well, there's a little drama building, I guess, in the building market, and that is, I know you had news on Centex, but some headlines crossing on another home, I guess, type company.
Yeah, we got KB on with some headlines here as well, talking about some charges. So we're getting some preliminary numbers, and they're going through their books. They're revaluing the assets that they hold, land and inventory. So we'll give you the latest update on the home builders, and also tell you why Cisco shares are one of the biggest percent decliners